Hi guys, this is Dan from the Investment ABC, your guide to financial freedom, and in this video I want to discuss whether investing in Lordstown Motors is a good idea before we can even publicly trade them. Lordstown Motors is a privately owned company which will go public via a SPAC, a special purpose acquisition company called Diamond Peak Holding, ticker DPHC, sometime in the fourth quarter of 2020. After the companies merge, we can buy Lordstown Motors under the ticker RIDE on the Nasdaq. A $10 per share for Diamond Peak Holding equals a valuation of $1.64 billion for Lordstown Motors. So there will be 164 million shares outstanding. 17% of the shares, approximately 28 million, are going to the SPAC investors, so the float is relatively small. The rest is going to the SPAC founders, PIPE investors, and existing shareholders. One share of DPHC will be transformed into one RIDE share after the merger. Under the PIPE investors, there are big names like BlackRock, Fidelity, and GM. Collectively, they have invested 500 million into Lordstown Motors. Together with the 280 million from SPAC investors, Lordstown Motors' cash balance totals $675 million. The company won't need to raise additional capital to produce their full-size pickup truck called Endurance in the second half of 2021. 135 million will be used for retooling their factory, 90 million for R&D, and 130 million for operating and general and administrative expenses. They will still have another 320 million left for additional growth opportunities like introducing other models like an SUV, for example. The reason why they don't need a lot of money to start the production is that they bought a former fully equipped GM plant in Ohio in November 2019 for only $20 million. In exchange, GM was offered to invest in Lordstown Motors $75 million. Lordstown's new plant is capable of producing 600,000 vehicles annually and is estimated to have a replacement value of approximately $3 billion. So basically, Lordstown Motors has just spent $20 million to purchase the plant and another 135 million for retooling, which is then worth $3 billion for them. Sounds like a very good deal for them and makes me believe someone wants this company to succeed. I think the greater plan is to develop Ohio for the EV manufacturing into what Detroit was once upon a time for the automotive industry. Another hint for that is that GM is also building a battery plant near Lordstown and that Vice President Pence unveiled Lordstown Motors pickup truck, the Endurance, in June 2020. Currently, there are already 27,000 pre-orders for the Endurance, which will lead to a $1.4 billion in revenue for the company. One of the reasons why it has so many pre-orders already is that it is unlike the Rivian or Tesla Cybertruck, tailored for commercial fleets and not private individuals. The only real competitor in the next few years will be the full electric Ford F-150 in my opinion, which will most likely hit the market after the Endurance. Lordstown Motors has the advantage to use this time to persuade its customers with their truck and establish a good brand and reputation. The Endurance is reducing the total cost of ownership by 27% after 5 years compared to the conventional F-150 currently. That is a good reason for fleets to try out this pickup truck. The range is 250 miles per battery charge and the top speed is 80 miles per hour. Furthermore, it has 4 hub motors which reduces the moving parts from 2,000 to just 4. The price of $52,500 makes it very competitive and customers also get a tax credit of $7,500, which is reducing the initial cost to just $45,000. As evidence of the Endurance appeal to the commercial fleet industry, ARI, the largest privately held fleet management company in the world, has indicated very strong initial interest on behalf of the client portfolio, and it is exploring the potential for on-the-product line upfitting and modifications within the Lordstown manufacturing plant. Lordstown Motors is trying to establish itself in a highly lucrative market with very few EV competitors. Pickup trucks currently stand as the most profitable segment of the auto industry, and the EV market as a whole will most likely grow exponentially in the next decades. Furthermore, the advantage to concentrate on the fleet market is that you don't need complex retail sales networks and that orders have a high volume and are more sticky. Lordstown Motors are projecting some really good delivery numbers for the next few years. We can see that they are estimating to capture 3.5% of the pickup truck market, which will result in 107,000 deliveries and revenue of $5.7 billion by 2024. This is just for the endurance pickup truck alone. There is a high probability that the company will introduce other complementary vehicles like SUVs, for example. There is also the possibility that Workhorse will win the USPS contract and that Workhorse will subcontract the manufacturing of the cars to Lordstown Motors, which will generate additional revenue. The team of Lordstown Motors is highly experienced with many years in the automotive industry, and some key executives of the company were involved with Tesla's huge early success. Currently, DPHC is trading at $13.34, which would value Lordstown Motors at around $2.19 billion. If you consider that they have a plant which is worth approximately $3 billion, $1.4 billion in revenue from their 27,000 pre-orders, and $325 million in cash left after starting the production of the Endurance, $2.19 billion seems severely undervalued to me. Furthermore, if you not only consider the hard numbers, but also facts like their already functioning plant, political support for EVs in general, and especially Lordstown Motors and Ohio, the niche but highly profitable market the company is operating in, and the first mover advantage in this segment, investing currently in this company has a very attractive risk-reward ratio. If investor sentiment in the EV sector stays like this when the merger happens, the valuation of this company could hit $8 billion in a very short time period, in my opinion. The way I'm playing it is that I will take out my initial money after valuations hit $6 billion and leave the rest as a long-term investment. You have to be patient because the price of DPHC might just trade between $11 to $15 until 1 to 2 weeks before the merger. But nevertheless, this company could be a long-term winner in the EV space, in my opinion. Everything in this video is just my own opinion and no financial advice. I'm no financial advisor and my analysis could be completely wrong. You should always do your own due diligence, guys. Remember, the company is a startup and investing in startups has high risks, so just invest an amount you're willing to lose completely. If you like this video and believe Lordstown Motors is a great buy at this point like I do, support the channel, hit the like button, share with friends and leave a comment for the YouTube algorithm. Bye guys and see you in the next one.